Hello, everyone, as you're coming in. We're going to be getting started shortly. It is about 12 o'clock. We're going to give people until about 12:02, and then we'll get started, everyone. Um, hey, Miss Miller, how are you doing? So, guys, as you're coming in, one thing that could help me if you are a newer business or you've been in business for a couple of years, if you can just put the number of years that you've been in business. And anything else you want to share. I'm always like looking in the chat. I see a couple of friends in the audience. Welcome, welcome, welcome. I don't want to call you out, but you know who you are. All right. Okay. Miss Henderson, I love it. 3 years. This is good stuff here. For those of you don't know who I am Hope Brown. I'm the owner of the Tax Minded Bookkeeper. And again, we're going to get started in about another minute to honor everyone's time. So I have the pleasure of partnering with FSC First today. So Samuel Smith is also on the line. We're going to talk to you guys before we get off later on about some of the wonderful training that they have as well too. So stick around to the end. Let me see what else. Just starting. Hey, Bridget. Well, I'm proud of you for being in the class because so many people wait until they need this information, like 4 or 5 years down the line. And then it's so many things you could be doing before then to prepare for it. So you're in the right place. I was just saying, guys, if you guys can put in the chat how long you have had your business, that would be helpful to me. I'm going to go ahead and share my slides. Hmm. Else always has too many browser screens up. All right. All right. So I'm sharing my screen now. Just if anybody cannot see my screen, just put something in the chat. Let me know. Da-da-da. All right, guys. So we're going to dive in and get started today. All right. So welcome, welcome, welcome. Welcome. You're in the right room today. If you are going to be like looking for tips in your bookkeeping on how to make lenders say yes to that application. Okay. I know that's a big promise, but stick with me. I'm going to go over some of the fundamentals today as a business owner that we really want to make sure we have in place with our bookkeeping just to be prepared when we're ready to try to go out and get that loan from whoever, whatever source, such as FSC First or other lenders in the industry. All right. So let me go ahead and go here. So a little bit about the use of materials. So we're going to be giving out later on the slide decks if you want to request it. Samuel's going to be able to send that out to everyone. Just to let you guys know, though, these materials are for education purposes only. Nothing like having your own bookkeeper, accountant, etc., for your business situation. So let's just enjoy this information today. All right. So a little bit about me. I am Hope Brown. My business is a tax-minded bookkeeper. We're a virtual firm out of Washington, D.C. We literally service business owners all over the country with tax planning, tax preparation, and also education. I am a second generation Washingtonian myself, second generation entrepreneur, super passionate about helping individuals such as yourself understand this finance part of your business because I just saw my parents struggle. So I don't want to see any other business owners go through that unnecessarily. So kudos for you for being in the room today. All right. All right, a little bit about what we'll cover today because I want to honor everyone's time and make sure you're in the right place. Okay. We're going to look today at how, from a lender's perspective, they could be possibly reviewing your books. And when I say your books, I'm really talking about your financial statements, such as the profit and loss statement, maybe the balance sheet, or the statement of cash flows. A lot of times when we want to be able to apply for a loan, we print these things off, we send them to the lender, but we're going to talk about some of the things from their lens of the way that they're looking at it. All right. And I'm using this term loan ready, but I really want to make sure that you understand what that means as far as in your business and having everything you're going to need from a tax perspective and a loan ready perspective, financial perspective, etc. That can really make the difference in you getting that approval. All right. We're going to talk about habits that you can be doing now before you even apply for that loan, kind of like in the preparation phase, okay? That is going to really help the lender in the long run understand what they're looking at and start to build trust with you that you know what you're doing with handling cash flow in your business. And I'm going to also go over just some red flags that are we know they're there, but we're gonna like actually identify them today, so you guys can keep them on the radar, because they really can have an impact on your loan not getting approved. Now, who the session's for? I would definitely say any kind of entrepreneurs who are seeking capital in the next couple of months to year to 2 years or whatever, lines of credits. You're trying to get money to grow your business, basically. All right. I would also say growth oriented, and I just mentioned that we're trying to grow, expand. Maybe we're trying to hire, and we want to have those funds in place, that line of credit in place. You are in the right room as well. Also, leaders who are just seeking clarity, maybe you're curious about, okay, what should I be doing as a business owner to be getting ready for that loan? And we're going to talk to you today. And then my proactive planners. Like I'm a proactive planner. Anybody who knows me knows that I probably have all of 2026 at least loosely planned out, as far as big moves we're going to be making at the Tax Money Bookkeeper. But you're going to know today how or actions you could be doing to prepare your books so that lenders are going to get what they're expecting when you're ready for your process. I'm going to take a moment to just look at the chat because I don't want to miss anybody. Mill has been for 7 years, Kim 15. All right. So we have a mixture of business owners who are at different stages of their business. I love it. I love it. All right. So why lenders care about bookkeeping? All right. So bookkeeping, record keeping, financials, cash flow is really kind of all talking about the same kind of thing when we talk about a lender. All right. Let's put ourselves in their shoes for a second. Okay. We're business owners. We're about making money, serving our clients, showing up the right way. All right. But from a lender perspective, they do have funds that they want to lend out, to help business owners grow, no doubt. But they are all about risk assessment. All right. Maybe not perfection, but risk assessment. And in your own business, you might have different situations where you could look at a situation or move forward in it, but you need to look and make sure that that's going to be a good decision for your business. And lenders are just doing the same thing. All right. They're going to be looking for things in that bookkeeping about the cash flow consistency. What kind of income patterns are you having? Your capacity to repay that loan, possibly. And then definitely any kind of financial discipline habits that they can see just by looking at those financials in a lot of cases. So, really simply put, I would say think of your financials or your bookkeeping that produces those financials as telling a story. All right. And lenders are going to be reading every page of that story. Like, trust me. All right. So, an example, this just happened yesterday. I had one of our bookkeeping clients reach out. They were trying to get a on the personal side a home equity loan. Okay, had just bought a house, but the lender reached out to me who was considering giving them that equity loan. They wanted to take maybe like about 15 grand out of the business, out of the reserves to put towards that. but we had to basically talk to the lender to show them the financials and show them maybe the history for the last 12 months, that, they average about X amount of dollars in the business each month. This is the money coming in. This is the money going out. This would not impact this 15,000 influx subtraction that the business owner wanted to take out, to put towards this. Like, it wouldn't have a negative impact on the actual business cash flow and operations. The only way we were able to do that, I mean, of course, yes, we can say it, but we were able to pull her financials. We were able to show them for the last 2 years the money coming in, the money going out. And then the lender in that situation saw the story that we were telling about the cash flow coming in and cash flow going out, and they approved that loan for her. But they looked at things like the cash flow consistency, because they're trying to determine her repayment capacity and things like that. So, just one example of how that can work for you or against you and why they care about bookkeeping. All right. All right, next, let's just pause for a reflection, because I'm talking about a lot of things with what lenders actually want to see. But if you're here, I'm thinking that you're here probably because you're considering going out for a loan for your business, in maybe the next couple of months, the next year, or whatever. But I always like to just pause for reflection, in my groups. And my question for you is, when you're thinking about your bookkeeping right now or today, like, what best describes how you're feeling, right? And we can put it in a chat, but are you feeling confident and organized? Like, you know what? Ain't nothing but a thing. I'm ready. What you need, a profit and loss statement? Bam, here it is. You're feeling good about it. Put confident and organized in the chat if that's you. Okay. Now, if you had got the financials, but you're not feeling like, somewhat unsure, it's done, but I'm not sure if it's right, put that in the chat or share that with me as well. If you're feeling like, okay, this is so overwhelming, okay, maybe you have bookkeeping set up, but it hasn't been done in a couple of months, maybe a couple of years, and you don't even know where to start. If that's you, let me know that. But, if you avoid it unless you have to, as far as dealing with your bookkeeping, financials, let us know that. You don't have to, but just think about this if you don't put anything in the chat. And just self-awareness with this and where we are is where I'm trying to take it with this exercise, right? Because we want to make sure that we're going to be ready for this. And if we're not, where are we? Okay. Um, just a self-reflection to know where you are. Because later on, we want to be able to do some action steps depending on where you are to get you where you need to be. All right. So Kim is saying we have an accountant, but I'm interested in awareness. I love that. You're empowering yourself. We work with a lot of clients, and I sometimes force them in a nice way to sit down with me so I can go through their financials with them. Because at any point as a business owner, like, you should be able to look at your profit and loss statement with confidence and feel good about it and just know what's there, the balance sheet, etc. So this is good, Kim. Just make sure you're meeting with your accountant, your bookkeeper, and you understand those financials. So if questions come up from the lender, you can answer those. All right. So let's see what else we got here. So what loan ready books actually look like? And let's talk about that loan ready books, that elusive loan ready books that I'm talking about. All right. So pretty simple. We're talking about best practices for your bookkeeping and record keeping, whether you're doing them, whether you're outsourcing it, whether you're just getting started. All right. We want to make sure that your bank accounts or your accounts in your books have been what's called reconciled. Okay. Like, so many times I will meet business owners. Maybe we're going to start working with them, do a cleanup or whatever. They're in QuickBooks, they're in maybe some other software, which is fine, but they haven't done what's known as reconciling their accounts. And that's just simply taking your bank statements, your account statements, etc., and comparing it with what's in your books. All right. I'll tell you a good way to see if your books are balanced with the reconciliation. If in QuickBooks, for example, if you go to your bank feed and you see the accounts there with the connections, but it normally has two numbers on that screen for each bank connection. If the bank says one number, like the bank account balance, but the QuickBooks balance says something else, 9 out of 10, your books have probably not been reconciled, and there might be issues with your financials. So get on that if that is you for sure. I would also say, like, no commingling. We need a clear separation between the business and the personal. All right. It nothing screams non-professional loud enough than when I can look in your bookkeeping and see you took your kids to Disney World. Like, no, right? We can do something called owner's distribution, and then we can do what we want to on our personal account with what our money is. But we don't want to, if we are in the habit of doing a lot of commingling with the personal stuff, there are methods with good bookkeeping practices that you can, distribute that money and then do what you need to do in your personal life. All right. I would also say loan ready books don't have inconsistent. I mean, basically the categorization and expense categories are consistent and they're easy to be able to use to do tracking. For example, I may have an expense called software subscriptions. But if I have I account called Zoom subscription, Stripe subscription, all these different things, like that might indicate a little like overkill with a chart of accounts in your bookkeeping. And you may want to work with someone to kind of streamline that into a more general flow that will be easier to read on a profit and loss statement or a balance sheet. Okay. And then lastly, the financials that make sense month to month, right? That is definitely something that is a loan ready book characteristic, meaning if there are swings, we should be able to explain them. Even in our business, for example, we're in the accounting industry. Normally, January through April, high margins as far as our tax preparation income, maybe bookkeeping income. Now, from May to maybe June or July, certain things go down, but other areas go up or with our services. Then by September, we swing up again. We know our cycles in our business. And if someone sat down and they looked at it month to month, I could easily explain it to them. So we want to make sure that you're able to do that as well, too. All right. So just going back to the chat just to check real quick. Um, Austrian is saying we're just getting started. And yeah, that's what I'm talking about right there. Austrian just wants to make sure that they're putting down a good foundation with this lending and just the books in general. So I love that. All right. But let me go a little bit more into the mistakes that we see that is definitely going to have an impact on your loan approval. Um, bookkeeping, sorry guys, losing my voice, just been talking to a lot of tax clients this week. But your bookkeeping is non-existent or maybe missing gaps. That's a problem, okay? Because that kind of goes into the area of what we can't explain, mystery, so to speak. All right. And if there are things like that, the lender might have questions about it and wonder, okay, are things being hidden? Is it risky? We want to give a good impression. So we want the bookkeeping done. We want to establish. We want to be able to explain that, and we want things consistent. All right, and that goes into that next category of mistakes that I see that cause issues or delays is inconsistent categorization. Just random expenses thrown in there. Maybe you're using it for commingling, meaning you're spending a lot of your personal life expenses out of there. That's all mixed in there. Lenders can't spot the right trends that they need to really do the analysis that they're trying to do. The bookkeeping itself is just, I don't want to say a mess, but maybe just confusing. We want to make that profit and loss statement or that balance sheet or whatever those financials as clear as possible when they're in front of a lender so that they have what they need to do their analysis and make their decision. And then the owner draws mixed with different expenses, that personal and business, that's a big error too that we see. And we talked about that. And then the last thing I'll say is like no explanation for large cash swings. Again, you should be able to explain what's happening in your business. The example that I gave you guys earlier about the business owner who we helped yesterday with that approval, talking to the lender, they had large amounts. I mean, they making money. That's not the problem, right? But the lender actually wanted to verify and know what those large deposits were that were going into that person's account. And we were able to explain it. We were able to show invoices that matched it, consistent deposits from the clients and things like that. So it wasn't bad. We were able to explain it, but just know if things are going up or things are going down, they may ask for more information about that and be prepared. All right. So we're going to have another discussion break. All right. And I'm going to ask again for everybody out there, just reflect for yourself if you're thinking, but which one of these challenges has caused you like the most frustration in your books? We're just talking about bookkeeping today. So, is it the reconciling accounts part, getting everything to match up with the bank statements and you're finding discrepancies? Is that you? Is it just understanding the cash flow, like understanding where the money's coming from, where the money's going? Maybe if you don't have bookkeeping, that might be a problem. Or even if you do have bookkeeping, let me know if that's your problem. All right. Maybe it is outdated bookkeeping and cleaning up old transactions, fixing past mistakes. Like that those invoices are in there that you actually created from 1978, but you just haven't had a chance to go in to delete them yet and clean that up. But if that's you with cleaning up old transactions, let me know that. Or just understanding like what the heck does the lender want? Like, I think I'm operating a business that is profitable and should be loan worthy, but like what do they want? But if anybody could tell me what are you thinking like you are, or keep it to yourself, but definitely like make sure that you know what your sore spots are at this point, so to speak, is what I would suggest. All right. Next, we are going, okay. So Kim is saying knowing what lenders want and then cleaning up old transactions. Thank you for being brave, Kim. There are a lot of people who fall into both of these buckets. So I would definitely say reach out to your a bookkeeper, definitely cleaning up the old transactions. Even for us as bookkeepers, I'll be transparent. Sometimes going back a year, 2 years, working with the client to try to figure out like what happened, unravel it, and correct it can be impactful. Like it can be a challenge. But again, and I'll get to this a little bit later. I don't want to spill the beans, but good financials are going to be solid because not only are they going to help your lending process, but we haven't even talked about how financials can help your tax preparation process and how whatever's in those financials, right or wrong, is going to be used to prepare your taxes and get reported to the IRS. So get that data straight is what I would definitely say. Make that investment. And then just understanding what lenders want. I say just keep on going to um, basically trainings like this, workshops like this. Like I say, they just want consistency. They want to be able to see stuff that makes sense, and you'll be all right. All right, so I want to talk next about best practices in your bookkeeping and just monthly bookkeeping habits that lenders are going to love you for as you are. And this kind of feeds into Kim's question about what the heck do they want, right? Um, I don't think it's necessarily about the software. Like I know someone who uses spreadsheets and they have impeccable records. Like they have produced their own financials that make sense for their business. That's not everyone's talent, but I just don't want to get caught up on the accounting software. Like you have QuickBooks, you have FreshBooks, you have Wave. Those are important, but I think it's more about consistency because we meet business owners, but they have bookkeeping set up, but they're not utilizing the software consistently. And that's really a big part which will get them into trouble every time. Okay. So I would definitely say a best practice is make sure that you're performing your monthly reconciliations. I don't know about for you guys, but my 2025 is over. I swear it feels like it was over in 60 days for me. Like time is zooming by. And I would just say, I'll get to that monthly reconciliation next month. Next thing you know, I'll get it to that monthly reconciliation next month. We're 2 months behind, 3 months behind. But that's the thing about bookkeeping, like it never stops. It's always consistently going forward. So we want to stay on those monthly reconciliations. The other thing about doing it monthly is it's always easier for me to find some issue now and correct it than it will be for me 6 months. So we don't want to do that. Like I have a couple of tax clients now who, like, we need their profit and loss statement to do their taxes, but they stopped doing their bookkeeping last year. And literally, they're trying to go back 6, 7, 8 months to figure out all these things that happen. And they're going crazy right now. All right. So I would definitely say monthly too. Don't just do the reconciliations and do the categorizations. Important. Yes, do them. But actually print off your profit and loss statement, print off your balance sheet, and look at it and just make sure you understand it. You don't have to be an expert on it, but you should have a general idea what is happening with those different numbers on those line items. If that's not something that you understand, there are a lot of services out here, accountants who would be able to give you coaching, take a business class, all those different things so that at least a high level, you understand those financials as a business owner. All right. I would say also flag that any unusual activity early. And that goes into that more consistently looking at the financials each month, doing the reconciliations. Sometimes, especially if we're using QuickBooks, we're using software, we're using any kind of accounting software, I have seen mistakes happen. For example, I had a client who had a read only connection to her bank coming in a QuickBooks. Something happened with the connection and it broke. All right. So when we came in later on to help her get it connected, it brought in duplicate transactions. Okay. Now she's not a monthly client, so she was pretty much doing her own bookkeeping. But when I looked at it during the tax section, like her financials, I was looking at the 1099 she got from clients and looking at her financials. And not all tax professionals are going to do this, by the way. They're just using that information you give. But I know this client and I know her industry. And it seemed like some things were doubled for some months. And sure enough, when we went back to the QuickBooks, we were able to see that double activity had happened earlier in the past year for her. So again, it's just always good to be looking at stuff and catching it because if she wouldn't have caught that, I think it was like an extra $22,000 that would have been added to her income that she would have had to pay taxes on. So flag unusual activity early for sure. All right. And then I would say document large or one-time expenses. Add notes to your bookkeeping software. Like if we service a couple of doctor's offices and they buy big equipment, x-ray machines and things like that, testing equipment. But if you're buying those kind of things, maybe it's a vehicle, if you are a service-based business, make sure you have the paperwork for it. There are things that you're supposed to be doing with those that you can add that as an asset to your business. And if there's an outstanding loan, those need to be also reflected in your bookkeeping on your balance sheet as well too. So, because if something comes up later on, you want to just have the transparency there in the financials and be able to explain it as well. So I've talked a lot. I'm going to stop for a moment and just look and see in the chat if you have any questions. Please feel free to put a couple of things in. And I'm looking here. Are you going through profit and loss and balance sheet to share what lenders are looking for? So today we're more so at a higher level, but I can tell you off the cuff, Lavette, they're looking for things that make sense. Okay. So for example, on your balance sheet in the asset section, in the bank account section, have your bank balances up to date and actually reconcile. So that was another big thing with the client that we helped yesterday. I was able to clearly show at the end of January what her bank balances were. So the lender could see 100% what her assets were, her liquid assets were. Things on the balance sheet also, you want to have any liabilities that you have there, credit card debt, loan debt. It should make sense and balance on that balance sheet. Um, in the industry, we have this kind of joke that says the balance sheet is where the bodies are, right? So I would say if you're doing your own bookkeeping, please have a professional look at that balance sheet before you give it to a lender. If there are things on there like negative amounts, like that's a red flag to say something's not being balanced correctly on that sheet. I would say for the profit and loss statement, just make sure it makes sense. If you're the things I've talked about earlier, where the categorization, not overly like too many categories, like keep it high level in the categorization, make sure it makes sense, make sure it's organized and it's easy to read. That's the main thing, and accurate and consistent. All right. I hope that that helps. Any other questions before I continue to my next slide? All right, cool. So let me go ahead to it. All right. So how lenders are actually using those financials, and this is going to kind of go into what Lavette is asking as well too. They're looking at the cash flow, but it doesn't necessarily always equal profit. All right. They're looking at those financials a little bit differently than you might look at them. So earlier I was telling you at a more detailed level, and now I'm talking about a more higher level. All right. They're definitely looking at whether or not you made that profit or not, but they're also the finish line for them is a risk assessment. So they're looking and look at the numbers to see consistently if you will be able to repay that loan. That's really so they're looking for cash flow patterns over several months. So you might give them a current financial, but they might want to see a breakdown per month for that accumulation just to see what the numbers are on a monthly basis. So I definitely would be ready to show that or talk about that with your lender. All right. They want to be looking for stability in the revenue and the expenses consistently that's happening. So again, if you're all over the place, I would take a moment to make sure that either it's explainable and it makes sense, or to organize that data so that all your revenue is clearly showing, all the expenses are clearly showing as well. They want to make sure that your operating costs are able to cover any new debts. Because think about it, if you go to an organization such as FSC First, WakeF, any of the other lenders out here that we work with, in normal banks, etc., they're going to lend you, let's say they give you $50,000. You just increased your liabilities for your company, meaning now not only do they have to make sure that your current numbers look good, but they are going to be wanting to make sure that your income, your operating, costs, etc., are going to allow you to pay that monthly payment or repay that debt back. So they look at things like that and they have formulas. The math just has to make sense. All right. And I would definitely say be ready if it's showing on your financials to be ready to explain any kind of fluctuations, especially if they're significant. You want to make sure that you have that because they're looking for stability in operations, predictable revenue, clear capacity, all those different things that make sure that they are having their money back. Because at the end of the day, all of our businesses, including mine, they're our babies. Okay. We believe in our business, but it's a business transaction when we're going to these lenders to ask for that line of credit. So they want to make sure you can pay it back. So that's really what the bigger picture is when they're doing their assessment as well too. They'll take into consideration certain things, but you got to be ready to have at least the basics lined up for them. So Levat, I hope that that helps a little bit. All right. Gonna keep on going here. So the moment of truth, right? And I ask this all the time. If a lender just reviewed your last 3 months of financials today, what would they see? And it's not about judgment. Again, I want to prepare you guys for what may be needed if you're going out to apply for these loans. So I would say definitely step one is just have awareness of what's happening in your own financials. And that's why I'm asking you guys these kind of questions about your financials, because every single person on this call today in this session, if you look at your numbers, your financials, it's going to be a different picture. No two people are going to be the same. So just be aware of what your current financial position is. If that means you had to have a appointment with your accountant, a bookkeeper, or whatever, go to YouTube to make sure you're understanding what it means, the numbers mean. Like have that awareness with your financial position. All right. I would definitely say look into the assessment to identify any strengths, but definitely if there are areas that you need to improve before you go for that loan, then okay, what's the plan to get there? All right. Or identify those. And that brings me to the third thing is like, what's the action plan going to be to improve those areas or strengthen those areas, so to be, so that we can address those gaps. And then we move towards the progress, basically. But awareness of what's happening in your financials or what's not happening, that assessment of like what needs to happen, what we need to keep going if it's working well, the action plan to follow those things, and then also the progress. Right. So here's the part where I want to start talking about taxes. And I want to see here. Lavette added another question. Is there an operating cost percentage the business should be at? I would definitely say a healthy one. And um, most of the time, when you're working with financial institutions to look at loan options, they will kind of have their own list of what's happening with things that they're looking for, maybe KPIs that they're looking for. So that would be where I would start first. If you're thinking about working with a particular loan, institution, finding out from them, do they have minimums of like operating, basically revenue to expense ratios and things like that, so you can make sure that you're in the ballpark of those. So I want to move on really quick because if you could mute your connection, that would be great. All right. So I want to talk about this. Anytime I'm at an event or I'm just in a situation where I'm meeting with some of my colleagues in these lending institutions, the people who are actually looking at the financials, the applications, et cetera, the main thing I hear all the way across the board, it doesn't matter if it's a traditional bank, a CDFI, or whatever the situation is, they always say for me to tell these business owners, and I'm quoting, tell these business owners to stop expensing everything on their taxes. Okay. So because your financials go both ways, guys, they can help with the lending. All right. They absolutely are going to be needed for the lending, but they're going to be needed for your tax preparation too. But where I've seen business owners mess up, and I was going to say the term mess up is when we use it for tax, preparation, that's compliance. We have to do that every year. But we're basically reducing our income down to a level that can be unfundable, basically. And once you cross over December 31st, it's no go back. Meaning, if you're going to be applying for a loan today, in 2026, they're probably going to want to have a copy of your tax return from the prior two tax years. And if you've reduced that income down, and they could have been deductions that you were actually entitled for, like you just basically reduce yourself out of being eligible for a loan. So just something to think about. There's nothing wrong with that approach. And I'll talk a little bit about it on the next slide. But the loan underwriting, like they use that same data, the tax is part of the data that they'll be collecting to make that final decision. So we just want to be aware of that. So I wanted to mention that today. And then also, timing matters. Okay. I would definitely say, and I'm going to put on my tax professional hat for a second. We have clients coming into us to get their taxes done because they have that compliance requirement. A lot of them come in for the tax preparation piece, but they just want to save money. They want to get a refund. They want to pay as less tax as possible, that they're legally required to pay. And I get it. But a better perspective is talk to your tax professional. If they're not asking you questions about tax planning, maybe after the tax season, before they file that return, even if it means doing an extension, you should be talking with your professional about your plans to possibly get a loan in the next year to 2 years and the impact that that may have on your tax situation. Because again, you may be eligible for all the deductions in the world, okay, rightly so. But if you know that at the end of the year, you want to be able to go into FSC First or any other bank and apply for a loan, and you haven't made enough money, like you just basically, um, you know, talked yourself out of being able to get that loan. So a lot of the loan readiness has to do with the tax planning part first. And I'm seeing some of the more people, some of the business owners who are more successful of not forgetting this tax planning piece. So definitely, if you don't hear anything else I say today about the bookkeeping and everything else, definitely make sure with this tax planning piece, you should be thinking about like, okay, how am I expanding this year, and what am I going to need to qualify for that? And that supports starting early to work with the potential loan institution to find out what their requirements are, so you can make sure that before that you're not only putting the bookkeeping in place how it needs to be, but the tax part too, the tax return, the planning, etc. I'm going to stop for a moment and see if there are any questions on this, because this is a super important slide that I want people to see. Okay, y'all. Don't reduce your taxable income to the point of where you don't qualify for a loan. All right, guys. So that is my cue right there to, I'm going to stop for a moment. FSC First has actually a survey that they want to let you guys take at this point. Samuel, I'm going to turn it over to you for a moment. If you can go ahead and share the link.
Thank
And
you so much.
yep, go right ahead.
Sorry. Thank you so much. Hopefully, you guys are enjoying this session so far. I won't take too much of your time, so I'm going to go ahead and pull up this survey. It's going to pop up on your screen. It should take about 2 minutes to fill out. We just want your honest feedback on how today's session is going, so that way we can better plan future sessions for you guys, okay? So I'm going to go ahead and pull that up for you. And then once everybody completes it, we'll move forward.
Mhm. All right, guys. So like those 5 questions, just put a one in the chat when you finished. And it's super important for us to provide feedback to FSC First. They are gracious enough to bring these kind of sessions to the community, the business community, and that's why I continue to support them to make sure that we're supporting you guys. All right, perfect. And be honest
Waiting for a
because
few more people.
yeah, that helps me become better too and better prepare as I'm doing these sessions as well too. So I have tough feelings. Anytime you deal with tax clients during the season, trust me, nothing hurts your feelings even more. And that's a PSA I want to say. Be nice to your tax preparer. Okay. Be nice to your tax preparer this season, please. All right. Hard to complete the survey as we're not done here. Oh, well, I'm gonna let that go, Kim, but I hear you. All right. Thank you, Kim. All right. Samuel, should I continue or what do you got?
Waiting for two more people, it looks like.
Okay.
Hey, you're actually good to go.
All right, perfect. Great. So we're going to kind of start landing the plane a little bit. I want to turn the corner and start talking about what you can fix now. All right. Because I know bookkeeping, just we've been doing this for a long time. I talk to a lot of business owners. You guys are absolutely all working in your like lane of genius. Like I could no way do the stuff that everybody on this line does in your industry, in your profession, in your business. So it gets a little overwhelming, but the advice that I would use is like, you don't have to clean up everything today. That's why we're talking about it now early, so we can plan gradually to just one thing at a time, just start to fix if any of these things we've talked about today are an issue for you. All right. Just focus your energy first on what's going to be mattering the most to the lenders, is what I would suggest. And I would say on the left here, fix these things now for sure. Any kind of missing months in your records, you want to make sure that they're fixed and they're in there, and that your financials accurately represent the financial activity in your business. So that's the stuff already in your bookkeeping software. But then think about it too. We see this a lot during tax season. Sometimes it was that one client who, instead of paying the business, they sent it, something happened, it was a fluke or something like that, right? And they had to send it to your personal account. So that's income that's not properly on the in the financials because it was sent to an account not connected to your bookkeeping software. Or maybe there were expenses that you paid with your personal funds that again are not represented on the balance sheet, or I'm sorry, on the profit and loss statement. So again, there are some things that are missing there, but concentrate on making sure that we have a complete set of financials is what I would say first. All right. Part of that too is once all the data is in your bookkeeping software, make sure that we're using the bank accounts, the credit card accounts, statements, et cetera, to actually reconcile those so we know that the balances that are represented on the in the software and eventually that will be on your financials are correct. All right. That's reconciling any kind of bookkeeping software that you're working with, Wave, FreshBooks, and QuickBooks. I mean, you're going to have to reconcile. And a lot of people are like, what's that? I'm categorizing. That's a second step you have to do after the categorization to actually make sure that you're using the source document, such as a bank statement, getting the balance from that, putting that into QuickBooks or the software to be able to make sure that the two match. All right. Um, Go back and look at the detail of the profit and loss statement or the balance sheet and just make sure that any income or expenses that may be misclassified are classified correctly. Okay. Like if there's an owner's distribution, but we have it classified as an expense to pay a contractor, like that is not correct. But little things like that are things that you'll see if you not only look at the summary profit and loss statement, but you actually look at the detail. Because again, if the lender does ask you for more detail, we don't want to be embarrassed with like, oops, my bad. We want to have accurate information. And then that last part, that just stop it. If you're mixing business with personal, you're co-mingling, mm-mm, that's not a good look, right? Lenders are going to notice that kind of activity. And you want them to take you seriously, is what I would say. Now, the things that can wait, not saying they're not important, but the things that can wait. If I had to suggest to prioritize things, if you got historical cleanup beyond like a lender's look back period, and that's why I say if you know you've identified a lender you want to work with, find out how far back financials they're going to need. Maybe they need the past year, maybe they need two past years. But if they're looking for just 2 years past, but you know you have some other historical cleanup beyond that time frame, that can wait. I'm not saying it's not important, but that can wait. All right. Any kind of minor expense reclassifications, as long as it's not making the books look, too just disorganized, I would say they don't affect your totals, whether it's set to a reoccurring membership due or software expense. My Zoom membership is an expense on my profit and loss statement. It's all gonna affect the net income or the total operating expenses. So I would say, depending on if it's needed or not, any kind of advanced forecasting or budgeting. I'm not saying it's not important in the business, but again, the shorter term is the stuff on the left, not the stuff on the right. And then detailed variance analysis, any kind of difference between what was budgeted versus what was actually spent. Again, important, but it can wait. It can wait. It's not urgent, 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 urgent for most of the lenders who you're going to be working with. All right. Trying to think. Any questions on that side? Okay. So here's a roadmap, guys. I like to call this roadmap on just a practical loan ready checklist. And we've talked about most of these things, but again, repetition, I want to make sure that they're sticking. If you want to mark this as a slide deck that one of the slides in the deck that you've referenced, like this is kind of bringing home everything that I'm talking about. The bank accounts reconcile monthly, the bookkeeping done. You've reviewed your financials that you're producing once a month and they make sense to you. You feel comfortable with explaining them to someone. The income and expense categories on the financials are clear. They stay the same month to month, and they're providing meaningful insights for whoever is going to be reviewing those. And then also on any kind of significant transactions, large purchases, maybe even large income amounts, just be ready to document that and show records for the last couple of years if that information is requested. All right. So let's talk about an action plan. I want you guys to start thinking about if any of these things are things that you know we've talked about today that you need to improve on in your bookkeeping. So my question is, what is one bookkeeping habit that you could improve just in the next 30 days? We're going to keep it simple, okay? Just start small. It could be one habit. It could just be making sure that you download your bank statements, by the 5th of every month, which you need for the reconcile. It could be just doing the categorization every, one day a week or bi-weekly. But just decide what that's going to be for you. I would say make it specific. Getting organized versus, deciding to reconcile your bank accounts by the 10th of the month, two different things, but make it specific so you can be accountable for it. And then put it on your calendar. I'll be honest to say, if something's not on my calendar, it doesn't even exist. It could be my kid's birthday, right? I'm just being honest with you. It needs to be on my calendar or it does not exist. But I would definitely say, because I'm a busy owner with business owner like all of you guys, we already wearing multiple hats. Like put it on the calendar, whatever that small habit is that you want to start doing in your bookkeeping, so we can make sure that it's consistently reminding you whatever the duration is that you set up. All right. All right. So final takeaways. When we're talking about from a lender's view of this, bookkeeping is going to build credibility. If you're trying to get a loan, and you don't have good bookkeeping or you don't have any bookkeeping, it's going to actually probably raise more credibility questions about the business you're running, the way you responsibly handle the cash flow. Let's think about it. People want to know if they're giving their money to someone that they can handle it. And the best way to figure that out or see a sign of that is to look at how they're handling the money that they have, their own money, before going in. Lenders want that clarity. I'm not saying it's going to be like perfect, but just be willing to talk about it. And that's a comment that I've been able to hear from a lot of lenders that I've talked to about what they're looking for. Who's perfect on this line? I know I've had financial issues in our business, financial challenges, but I've worked them out and I'm transparent about that if I need to talk to someone about the money part. And usually it's like, okay, this happened. This is what we did to resolve it. This is what we're doing to move forward. And then for getting started, I know it can be overwhelming with the financial part, but just start small, something consistent that you know you can do. When we get that accomplished, add something else with the habit related to the healthier bookkeeping practices, and so on is what I would say. All right. So I'm proud of you. You've taken like almost an hour just to kind of understand this topic better of what lenders are looking for in that bookkeeping. Um, if you're doing these habits, they're going to get you a little bit closer to what is going to be presentable for anyone who's going to be looking at your financials for sure. All right. So I'm going to stop for a moment and turn it over to you guys for any questions that you have. And I'm going to check the chat. We have about 7 more minutes. Feel free also to unmute. I'm a tax preparer too, so if there are any tax questions, this is the time of year that everyone has those. But the bookkeeping questions, I'm going to open the floor for you guys right now. I'm scared of y'all. Y'all don't have any questions about taxes? What? What? No taxes about bookkeeping? All right, we got a shy group. Okay, they're coming in now. Yeah, Kim, consistency. A huge takeaway. Not a problem. Um, the doctor says, should I include my previous years in my bookkeeping software? If you're just, I don't know if you can unmute, but I would say if you're just starting off, I would say it's a lot for business owners, especially if they're doing their own bookkeeping, to not only start bookkeeping for 2026, but put the older year in there and actually catch up. That's why we try to do a lot of the bookkeeping workshops to say, hey, get bookkeeping earlier in the year. So I would say if you have that accounting experience, sure, go for it. But if you're just starting off and you know you're going to be doing your own bookkeeping, just start off with January. It'd just be a lot less harder for you to do all of that back bookkeeping versus just start off fresh for 2026. All right. Um, yeah. And doctor, you can reach out. I have some suggestions for you too. Let me put my information here, my little slide here. And here is how to connect with us if you'd like to work with us, even just a discovery call if they're, because I know financial matters can be a little, private. You want to keep yourself private, but please feel free to reach out to me. But yeah, 1 year for you, doctor. And then Eric, oh, thank you, Eric. I appreciate it. You are too kind, sir. Thanks to FSC for, yes, FSC, both of you guys are great. FSC first and also Eric's organization. Is it appropriate to clean up previous years, 4 or 5 years in owner's equity? um, Lavette, that would be a conversation I probably need to have directly with you. Only because if in the past, if taxes have been filed, let's say that you go back 3, 4 years with owner's equity, and we go back and make some changes on that. I always like to know business owners know that if you filed your taxes, that could affect your taxes and having to go back and do an amendment depending on what entity type you are. If you're an S corp, for example, not so much if you're a sole proprietor or single member LLC, but S corps. There's a section, a balance sheet section on the 1120S tax return that those organizations file that has the equity information on it. So it could impact that. So talk to your accountant about that. And then Bridget, yes, ma'am. So my information is on the screen if you'd like to connect with me. The doctor says, thank you. I was referred to you, but haven't had a doctor. You better reach out. It's a tax season. I'm surprised I'm even on this call today. So definitely reach out. I'd love to be able to support you in any way and anyone on the call today in any way that we can. And if there are no more questions, Samuel, I'm going to turn it back over to you. And thank you.
Perfect. Thank you so much. Once again, Hope, we want to thank you always for coming and helping FSC First to drop some gems. So, of course, entrepreneurs who, just need a little assistance with certain areas in their business. I also want to thank everyone else for joining too, for taking your time. So, want to educate yourself, want to always improve. If you guys have no other questions, feel free to definitely check out our website, fscfirst.com, for more webinars. We have many more coming up in this loan readiness series. In addition to that, we also have a franchising accelerator also coming up. So please feel free to also register for that. It is for Prince George's County businesses only. And make sure you guys do follow us on social media. We will send out this recording and any additional materials to your emails no later than tomorrow, but always feel free to reach out to us if you guys need anything else. I hope you guys have a great day. Alrighty, hope. See you later.
All right. Thank you, Samuel. Bye,
And
everybody.
come have a great day.
Okay.